I'm going to show you the importance of the time frame that I use while trading. I often use daily time frame, 4 hours time frame, 1 hour time frame, 15 minutes time frame, or maybe 5 minutes time frame, depending on what the price is showing at that moment. I'm going to show you the importance of this time frame and how to use it in this video. But before going to that, if you're seeing me for the very first time, my name is Divine. What I do here is document how I trade and make videos that will improve how you approach trading. If you want to be something like this, I want you to subscribe, like this video, and drop a comment. I'll be right back. I'm going to use GBP USD to show you the importance of time frame. That any time frame you're going to use on the charts, it has a great importance. I'm going to show you the importance of the 4 time frames that are used to analyze the charts. I'm also going to be showing you a live example of how I analyze the charts. That means at every point I get to, I will show you everything step by step in this video. The first time frame that I always use is daily time frame. And the importance of daily time frame is to give you clarity on where price is going to, and also give you key levels. That means the two most important use of daily time frame is to identify direction and as well identify key level. Let me clear everything off the chart. That the reason I'm on daily time frame is to simply understand direction and the key level on daily time frame. And for me to understand direction and key level, I need to know how to identify direction. And the way to identify it is by simply using support and resistance to interpret what price is doing or where price is going to. And I will show you how to do that first of all. Now, for us to identify direction and key level, we want to simply use support and resistance to identify the point where support is and the point where resistance is. And for us to do that, you want to zoom in properly and see the bigger picture. You want to zoom everything properly and see the bigger picture. In this case, I've zoomed in properly, and if you look closely, you will see that this place is simply a good level of support, and here is also a good level of resistance, right? That means here is also a good level of resistance. Now, having identified this support and resistance, the next thing we want to do is to simply interpret what it is saying. And if you look closely here, you will see that at any point price gets support, price is buying to resistance. And at any point price gets to resistance, price is selling to the support. And at any point price gets support, price buys the resistance. Same thing happens if price gets to the resistance, it sells to support. Now in this case, price broke below support level, giving us the idea or sentiment that price is no longer respecting support and resistance, that a support has turned to a resistance. That means in this case, price is simply in a downtrend. And we want to simply identify the key levels so that we know how to join price to where price is going to. In this case, downtrend. Now the key level is simply the point where price made a reaction from on the trend. In this case here, the point where price turned to resistance is simply a key level. And the point where price got to after price turned to resistance is simply support key level. In this case here, we are able to identify the support key level and the resistance key level. This is the only thing you want to do on daily time frame. Now the next time frame is simply 4 hours time frame. What is the importance of 4 hours time frame? Right? Let me go to the 4 hours time frame. What is the importance of 4 hours time frame? Now, the importance of 4 hours time frame is to simply give us market structure and supply or demand zone. That means daily time frame gives us direction of where price is going to, and 4 hours time frame simply give us the market structure. That means how price is going to that direction. And the most important thing on the 4 hours time frame is simply this market structure and supply or demand zone. Now, how do we identify market structure? For us to identify market structure, we want to simply identify market structure from those key levels that were identified on the daily time frame. In this case here, this is the resistance key level and this is the support key level. We want to simply identify market structure that price has created from this point to this point and from this point to the current point where price is. In this case here, if you look closely, you would see that price is simply moving to the downside and price is giving us a high, a low, a high, a low. Price went into a resting phase, give us a low. This is the high and this is the last low. That means in this market structure, here is the last low and here is the last high. Let me clear that off. Here is simply the last high. That if price take out this particular high, we are expecting price to simply go to the what? Resistance key level. In this case here, price have taken out this particular high here, which means price is currently heading towards the resistance key level, which is simply here. That this buy movement, we are expecting price to simply what? Go to this particular level here. Now, before we know how we can join price to go to that level, we want to simply understand the market structure that price has created since price took out this particular high here. And if you look closely, this is the low that took out that high, right? This is the low that took out that high. That means from here to the current place where price is simply one long movement, right? From here, from this low to this point is simply one long movement. And the demand zone that was printed from this low and this high is simply at this level here. And what it's telling us is this, that all of this buy long movement that price is going to, there will be a point where price is simply going to sell into this zone, to either fill this zone or to continue a buy movement. And for us to know how we can simply find that zone that price likely going to start selling into this zone, want to simply refine the particular demand zone to become a point of interest and know how we can join price to where price is going to. In this case, we're simply going to go to the 1 hour time frame and also know that the 1 hour time frame have its importance. That the importance of 1 hour time frame is simply to refine a supply or demand zone to become a point of interest and most importantly, identify liquidity. In this case here, if you are to refine this particular demand zone, you will see that here is simply going to be our point of interest. That one price to simply sell to this point to continue your buy or to continue the sell. And for this to happen, there has to be liquidity that will hold this zone. In this case here, all of this movement that's happening here is simply the liquidity that will enable this place to hold because the stop losses resting below all of this swing low here. Now in this case here, remember that price is simply heading to the upside, that there will be a point where price is simply going to start to the downside to fill this particular demand zone here. And most likely it is when price gets to this particular resistance key level. So our aim now is to simply join price to this particular key level that price is going to. And for us to join, we're simply going to go to the 15-minute time frame and identify the point we're going to join price from. Remember, we're able to identify the point of interest, and also we're able to identify liquidity on the 1 hour time frame. Now we're going to the 15-minute time frame to understand the point we're going to join price from. Now, for us to identify the point we're going to join price from, we want to simply see how price is inducing liquidity, right? We want to see how price is inducing liquidity and identify the last point that price is going to take out to know when price will start sweeping the liquidity. In this case here, on the 15-minute time frame, if you look closely, you will see that, let me zoom in properly. If you look closely, you will see that since price gave us this demand zone here, price was giving us swing highs and swing low. And in this case, this is the low, this is the first point of liquidity that have engineered all of this liquidity that price is still inducing. This is the high, this is the low, this is the high, this is the low, most likely this is the high, and there might be a low to continue to the upside or to continue to take out liquidity. For us to identify that low that will make price to start taking out liquidity, we want to simply identify this last point that is a low. In this case, this is the last point that is simply a low. That anytime price take out this particular low, we are expecting price to simply sell to this particular level here. Now, how do we identify our entry? For us to identify our entry, we want to simply study how price behaved at this low to the current high that price is. That means how the price behave from this particular low to this high here. In this case here, as price was moving from this low to this high, price also left liquidity and also left a demand zone. In this case here, here is the liquidity that price left, and all of these points here is simply the demand zone that price also left. That means price is likely going to come back into this zone to continue a buy, right? And for that to happen, we want to simply see price sell to this zone and then we'll look for a buy opportunity. And if price take us out, we then look for a sell opportunity to the 4 hours time frame point of interest. In this case here, this will be our entry, and we're going to be looking for price to come back to this level as a TP1, and most likely to this other level as TP2. But let's set a realistic TP here, which is simply at this first high here. That our interest is to simply see how price is simply going to sell to this point, take out this liquidity, and continue to the buy side. If that does not happen, we're going to go for the next alternative, that if price simply buys to the upside at this point and give us a new high, maybe if price simply buy like this, give us a new high here. We want to simply see price sell to this point here and then continue to the upside. Here becomes our new entry for a long, and our stop loss is going to be here, and we want to 3 raised to 1. This is basically how to use any time frame that you choose to use. Now, if you have any question that's very complicating, you can simply drop a question in the comment section and I'll attend to it. That will be all for this video. I'll see you in the next one. Peace.